kind of, as Jerome Powell and the FOMC have decided to keep the rates where they are. Crypto and Bitcoin has started to rally. Why? We potentially have the answer. Also, big news from Uniswap and Robinhood. What does that mean if you trade on Uniswap or have a MetaMask wallet? We're going to go over that. Also, a big important update for Solana and Fire Dancer. It is going to be here a lot sooner than you think. Well, that makes Solana the best layer one in the entire game. We're going to discuss that. We have ETF flows to discuss. We're going to take a look at the markets. And, of course, we're going to listen into what Mr. Jerome Powell is going to say. Is he going to foreshadow another rate cut going into the next FOMC meeting? We're going to talk about that and much, much more on today's episode of Sin City Crypto. Let's go. I pray to God Jimmy's in here because I don't want to hear one more damn word about a damn desk, okay? So welcome everyone to Sin City Crypto. This is David and this is our new desk. So we hope you guys enjoy it. I am joined today by none other than Miss Gravy Train herself, and also with the mastermind genius Forrest from Sistine.ai. Forrest, how you doing, man?
Yo, what's up? Thanks for having me on.
Thanks for joining us.
Pleasure.
You like the desk?
Oh, it's beautiful.
You better
it's
like
nice.
the desk.
I love the new
There's a lot of
studio. Pretty sweet.
Man, let's just jump right in. So here we go. What did the Fed do? Well, they didn't do anything. They held the rate steady at the 525 to 550, but why are the markets rallying if nothing's changed? Well, something did change. They are going to ease the pace of the balance sheet reduction. What does that mean? That means that instead of not renewing and buying back more bonds and corporate bonds and mortgage-backed securities and just kind of letting them fall off their balance sheet, they might start adding those again. What does that mean? More liquidity for people, more liquidity and money sloshing around the markets. People take this, and we'll take a look at the SPY chart, the NASDAQ chart, and the Bitcoin chart. But the investors, Wall Street, they're probably taking this as a sign that, hey, this was the first step. The next meeting, are we going to get a Fed rate cut? Forrest, what are your thoughts on today with what Jerome Powell did? And what are your thoughts on them moving to ease the balance sheet reduction? And do you kind of agree with the sentiment, or why do you think Bitcoin is pumping?
Yeah, I mean, so this is a move away from quantitative tightening, not in a big way, but it's a baby step in that direction. I believe that they're going to prop up the markets into the election. That's just been my belief for a while. I'm bullish for the next couple of months, 3 to 6 months, for a variety of reasons, and this is kind of reaffirming that. I don't necessarily think I think there's a strong chance the bottom's in, but I don't think it's I think it could take a few days or even the following week for this thing to really shake out and for us to get a retest, maybe a double bottom, a higher low, whatever it takes. But yeah, I think a rate cut in June is very likely because I think on May 15th, the inflation data is going to come in pretty in line or lower than it did this past time around. And then if you look at Trueflation, starting off May 1st, the May data, the inflation dropped significantly from 2.5 to 2.2% in a day. So yeah, I think the next 2 months inflation data is going to come in low, and that's going to urge them to cut sooner than the market anticipates. But that's just my opinion. I could be wrong.
Interesting. So just want to show from the CME, the probabilities, what is being priced in or starting to be priced in. So 93.6% believe we'll get another, essentially another nothing burger in the May 5th or in the June 12th meeting, with 6.3% believing we're going to see a Fed rate cut of 25 basis points, with 0.1 believing it'll be a 50 basis point rate cut. Nothing on the rate hikes. Are hikes over? Maybe. We know we had the JOLTS report come out, the job opening and labor turnover report. But here's just one sector, housing, right? Housing labor. So construction job openings implode from 456,000 to 274,000, 182,000 monthly drop, the biggest on record. Biggest on record. And so I haven't actually have the jolts pulled up here. Let's take a look. So 3.5%. So this is the unemployment rate, 3.5% year over year, which is right where they want it to be. So that is not ticking up. But if we see more of these numbers start to come in across the different sectors, could we see those unemployment rates start to adjust? Potentially, yes. Forrest, can we take a look at, let's maybe start with the traditional markets. How are they reacting to what the Fed decided? And then right after that, let's just jump right into a Bitcoin chart.
Sure. Let me share my screen here. Just give me a second. Let me know if you guys can see this.
Yep, you're good.
Yeah, so I think a lot of the bounce that we're seeing in the short term here, and we can look at the traditional markets. A lot of the bounce we're seeing in the short term here is probably a lot of shorts closing more so than a lot of people buying. Right? You had a lot of people shorting the market, and probably still have a lot of shorts open, waiting for Jerome Powell to come out hawkish. It sounds like he's going to come out a little bit more dovish based on what we've already seen. But yeah, we got a little spike here on the 15-minute out of the S&P 500, kind of filled this gap and then came right back down. I think this will probably just be kind of volatile, but within this range until Jerome Powell is done speaking. My guess, and I could be wrong here, my guess is if Jerome Powell comes out dovish, we'll see a lot of this retraced in the next day or two. We go over to Bitcoin. We see the same exact thing for Bitcoin. Bitcoin is just a leveraged version of the NASDAQ or S&P 500 recently. Highly, highly, highly correlated. And this is something that goes back to what we've been saying for the last, I don't know how many months, that, with this ETF now, there's a lot of institutional investors that are going to treat Bitcoin like they do a risk asset. They're going to come in, and if they're risk off, they're going to start cutting. It's really interesting that we see Bitcoin dominance falling off. Bitcoin dominance is in free fall right now on the 15-minute, which is super interesting because normally when Bitcoin goes down, which Bitcoin's down 5% today almost, you see altcoins drop harder. But what I believe is happening is that it's the institutional investors, the ETF investors, that are treating Bitcoin like a risk asset and cutting risk, cutting Bitcoin. But the longer term minded crypto native investors like you and I, we don't want to give up our altcoin positions because it's a bit with Bitcoin halving just happened. We, subscribe to the market cycle theory and the market cycle belief, and that this is going higher before before we get any type of bear market. So I think right now the institutional markets are kind of dragging Bitcoin down a bit, and if we see a recovery in the S&P 500, depending on what Jerome Powell has to say, we may see a nice recovery in Bitcoin. The thing to look out for, guys, to get bullish, at least what will make me very bullish, is for this to turn into a deviation, right? We talked about, hey, this is bad news if we lose this range. It's bad news if we lose 59K. Have to cut some positions, but we can add those positions right back if we recover 60K and take out that downtrend line, and you only miss out on a little bit of upside, but this likely means we're going significantly higher. So that's what I'm paying attention to. I want to see Bitcoin back up above 59, 60K.
Awesome. Thanks for that, Forrest. Let's take a look at this here. So yesterday, breaking news: CZ was sentenced to 4 months, and so here's a meme: Judge, I hereby sentence you to 3 months in prison. Which to then CZ whispered in his lawyer, and then the lawyer said, "My client has requested you add 1 more month." Well, because you keep seeing CZ with this here 4. Crazy. 4 months. You got 4 months in prison in the 4th month of the year. In the 4th Bitcoin halving cycle. Interesting. We also have this. If you remember, this is Nas Daily. Has one of the largest YouTube channels and audiences online. Remember, he did a video on Sam Bankman-Fried calling him a generous billionaire, and then also did a video on CZ. So, guys, any influential person out there, if this man's team reaches out to you and you decide to take that interview or let him do a video on you, just know you're probably going to prison 3 to 4 years later. And then here's a visual representation of the Bitcoin halving and how prices have reacted afterwards. I don't know why I thought this was really funny. Anyways, let's take a look at the Bitcoin ETF flows. This is from Farside. So yesterday, BlackRock, again for the 4th consecutive day, bled off 35.3 million, with Fidelity also seeing outflows of pretty much identical 34.3 million. ARK was the only ETF product that brought in money. It had a net positive flow at 3.6 million. Grayscale's selling continues, ticking up to that $100 million mark yet again, coming in at 93.2 million of outflows, bringing our total net flow to negative $161.2 million. What are your thoughts here on how things have transpired for us? Should we look at this kind of like we look at the ebbs and flows of the markets? Like, it can't just be up only. Does this signify something different? How are you reading into how these outflows have been over the last, let's say, 2-3 weeks?
Yeah, I think this is exactly what I was just kind of alluding to on the chart, is that these institutional investors, like they manage risk, right? If they think that the S&P 500 and the broader economy is, or if they think there's a less likely chance of a rate cut, or they, for whatever reason, think that that risk assets they're less bullish on risk assets, they're going to start cutting risk from their portfolio. These funds that have put Bitcoin in their portfolio, Bitcoin's a line item to them. They've got, S&P 500, stocks, bonds, gold, silver, Bitcoin, right? At the end of the day, anything besides dollars is, going to be considered on some spectrum a risk asset. So when they want to go and cut risk, when they get a mandate or they decide that, hey, we've got to cut risk from our portfolios, Bitcoin is one of those line items that they may trim. Will they sell all of it? No, but if they're targeting, if they're bearish on for whatever reason, or they want to risk off, and they want to go from 75% risk assets to 70%, well, they're going to start selling risk assets in their portfolio to get to that target. And Bitcoin is, for them, treated as a risk asset. I mean, it makes sense. It's super volatile. It's like a 3x to 4x 3x to 4x leveraged version of the NASDAQ. You can overlay the two charts and they trade very similar. Bitcoin just has more volatility. So like I said, I think you're going to see more of that happen, and it's going to go the other way around. When the S&P 500 starts pumping, right, and off of the kind of the lows of the bear market, right, we saw the S&P 500 leave Bitcoin in the dust. Well, next time the S&P 500 takes off, I don't think it's going to leave Bitcoin in the dust. I think Bitcoin's going to be right there with it, because these funds are going to be allocating more and more to Bitcoin in line. You're just going to see that correlation strengthen. You have institutional buyers and institutional sellers. It's going to trade more like an institutional, and more correlated with what institutions are investing in, and that's a lot of stocks, equities, and other risk assets. So, yeah, it goes both ways.
My theory on this is, think about yourself, you watching. I'm sure your portfolio consists of coins that you've held for a long time, coins you've just bought, coins you're just looking to get a 2, 3, 4, 5x out of, and coins where you've really invested your time and you're drawn to the community, right? You're drawn to the project. You have a direct, maybe a personal relationship with some of the people from the team. Well, when shit hits the fan, what are you most likely going to sell first? It's not going to be the project that you've invested a lot of your time in and you have that connection with. Could it be possibly the ones you held for 5-6 years? The more likely scenario is the one that you just recently bought or are looking just to speculate on. There's no emotional attachment to it. Same idea, in my opinion, with these ETFs, right? Wall Street, it's a brand new product. They're like, oh shit, I got a what, 1.2, a 1.5x out of this thing. I'm going risk off a forward sale, let's say 75 to 70 or even 50%. What's the first thing that you think they are going to sell and get rid of? Probably not going to be the Tesla stock they accumulated at $50 or the Amazon stock they bought at $300 because, hey, they've held on for this long. They have an emotional attachment, whatever the case is. So it's probably going to be the shiny new toy that was put in front of them that they've already made a lot of money on. So that's kind of my thing. So I refreshed the CME, and if you guys remember, just 10 minutes ago, we were at 6%. Now they're putting a rate cut at close to 10% for the month of June. And we know the CME is usually pretty spot on. Now, they're not perfect, but let's say accuracy around 96, 97%. And then I do want to share a little bit of altcoin news and some stuff here. Before we stream Jerome Powell going live, let's talk about Tether. Man, these are insane numbers. Look at this, Forrest. Tether reported $4.5 billion, not of revenue, Forrest, of profit for the first quarter of 2024. $4.5 billion. What do you think these banks are doing? What do you think? Why do you think PayPal decided to get into this game, right? Pretty insane. I mean, do that over four quarters, you're looking at $18 billion in profit. Not revenue, profit, money in their pocket. $4.5 billion. So shout out to Tether for making a crap load of money. Now, where has that money gone? So they are currently holding $5.37 billion worth of Bitcoin, $3.6 billion worth of gold, other investments, $2 billion, cash equivalents, 1.8. But the vast majority is in U.S. Treasuries, which puts them in the top 25 globally of anyone, whether it's a nation state, a person, a company that holds U.S. debt. Tether is in the top 25. Forrest, what are your thoughts on this? Obviously, we know Tether with some of their profits, they've already stated, and they're actually doing it, buying Bitcoin. What are your thoughts on that? Do you think more banks are going to get into the stablecoin industry seeing these numbers? What are your thoughts here?
Yeah, this is why when people talk about like, oh, Tether's not backed, and like, okay, maybe they aren't fully backed, but they're probably pretty darn close, and it would not take them long to close any gap.
Forrest, just real quick. Let me interject real quick. I want people to understand one thing. The fractional reserve rate since 2020 for banks has been 0. What does that mean? That means if they have $100 million of customers' deposits, they could literally hold 0 of that, and they wouldn't be in trouble. Go ahead. Sorry.
Yeah. So like, even if you say worst case scenario, Tether's 70% backed, technically they're more backed than the money, the dollars that are sitting in your bank. Do I think Tether's done some shady stuff in the past? Absolutely. Do I think that they could be targeted in the future by the SEC or some other government entity, and maybe people go to jail? Sure. I'm sure they are not totally clean, but they have a monopoly currently. They enjoy a monopoly on one of the most profitable business models in the world, and this is why XRP wants to get involved. This is why PayPal wants to get involved. They take money and they invest it in U.S. Treasuries, and they just sit and hold it, and that's it. All they do is have a smart contract that issues mints USDT. It is insane, and they just made $4.5 billion, and I believe that I could get the number wrong. I don't know if they've expanded or not, but they've got like 30 employees. Like the amount of employees that most tech companies
what do they do?
have to. What do the employees do? I'm sure it's just a bunch of like compliance and auditing and like managing, but it's probably not much. Maybe they have like an intern for social media, but I mean, yeah, it's probably not. I mean, they probably just manage and move money around. I mean, somebody's got to be the person that's buying the Bitcoin. Somebody's got to be buying the gold. Somebody's got to be putting out the reports. It's probably just accountants and auditing and finance people. But yeah, not a lot of people for their revenue. I think it's like one of the highest ratios in the world for profit versus profit per employee or revenue per employee. So yeah, I mean, we're going to see, I think they're going to enjoy this monopoly for a while, but I think banks and XRP and PayPal have wised up to see and are seeing how absurdly profitable this is. And there's a growing interest in moving dollars on chain. I think you're going to see more and more of these companies come in and try to take some market share. Now, whether or not Tether allows them to do that remains to be seen. But super profitable business model. A lot of people are going to be copying it.
Talk about job security, huh? All right. I said Fire Dancer is a lot closer than you might think. Let's take a look here from Cantaloupe Peel. One of the lead developers helping with Fire Dancer just put out this tweet yesterday. The final integration of Fire Dancer client is underway. Final integration before it hits mainnet. Forrest, we talk about ad nauseum what Fire Dancer is going to do, right? The 99% of the issues that have bogged down Solana, that have caused the network outages, that have caused the failed transactions, Fire Dancer will solve it as long as it does what they say it's going to do. Once this is in place, is there any other layer one for us that is currently on the market that you can point to and say that is a better product?
No, I don't think so at all. I mean, assuming that this is the fix, right? This is the fix for the kind of the spam and the failed transactions and the network outages. If this is the fix for that, then no. I mean, I think Solana will at that point have it all. Like I said, I think I've said for a while, I think Solana will continue, and I'm not bearish on Ethereum by any means, but I think it will continue to trade more and more over time. I don't think it's going to get there overnight, but more and more in line with Ethereum's valuation, which is pretty far away from where it currently is. So yeah, I think it's just going to continue to reprice to the upside. There's going to be corrections along the way. There's going to be big jumps along the way. We saw, it run from 100 to 200. Obviously, it's got to cool down. I wouldn't be surprised to see this trade, Solana trade at $300 to $400 if we get another leg up in Bitcoin. In the long term, I could see it trading, it's higher than that. But yeah, I mean, this is a very bullish thing if it works for Solana.
All right, Jerome Powell is about to begin speaking in about 2 minutes. I do want to share this with you from Geiger Capital. Treasury buybacks are here. The U.S. Treasury, they are using cash from bond sales or the Treasury General Account. They'll be buying back bonds in the secondary market via primary dealers to improve liquidity and artificially suppress yields. Fed QE meet Treasury QE. This is not a good sign, right? What does this tell us on a fundamental level? The secondary market and the auction market is starting to dry up, right? You have the Bank of Japan trying to prop up their currency. You have China and Russia. They're now, I believe, I could be wrong, 100% of their trade, I believe it's in oil, is settled outside of the US dollar. That's pretty big. We're seeing this de-dollarization happening slowly. I'm not saying the dollar is going to collapse tomorrow, but at the end of the day, every single world reserve currency has collapsed. So we're not going to sit here and say, no, the US dollar is going to be the only one that doesn't happen to. That is not true. And this is one thing you can point at and say, okay, this is starting. What does this mean? This means more money printing. This means more Federal Reserve quantitative easing. So thoughts on this for us, and then we'll jump to Jerome Powell.
Yeah, so in the short term, the effects of this, in my opinion, are bullish, right? They're pushing liquidity into the markets. They're propping up the bond market. They're propping up bonds. They're suppressing yields, right? Bonds and yields, bond premiums and yields have inverse relationships. So they want to bring yields down. They want to prop up the prices of bonds because banks and pension funds and anybody who owns long-term, treasuries or, in other words, U.S. debt, has taken a bath, right? Stocks have come all the way back to all-time highs and then some, but bonds are still down 50+% from from their peaks, right? This is why we've seen banks go under, and if yields continue to rise and bonds and U.S. debt continues to crash, then it's worrisome for the broader economy. This is like, think about it this way. Long-term treasury bonds are what, for the longest time, it's actually, legally speaking, the only asset that investment advisors are allowed to refer to as risk-free. Well, that risk-free, quote unquote, risk-free investment is down 50%. And that risk-free investment, the government is trying to come in
Forrest,
and prop it up from
Forrest,
crashing.
I'm so sorry. Don't mean to cut you off, but Jerome Powell's on stage. Let's bring him in, Rocco.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward our dual mandate objectives. Inflation has eased substantially over the past year, while the labor market has remained strong. And that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. Our restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs-to-workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters.
So what we're going to do here is
Paul,
we will keep the feed on your screen with subtitles. We'll kind of interject, and then that way, if you guys want to see what questions he's answering, you can feel free to do so. Forrest kind of started off a little hawkish, and then when he started talking about, and I was literally watching the Dow Jones, it is currently ripping on the 5-minute chart. Then when he started talking about the quantitative easing of, or well, less of the quantitative tightening on their balance sheet, the stock market started to go up. What's your takeaway from what JP said? And hey, higher for longer, I guess. I mean, I don't know. What's your like knee-jerk reaction here?
Yeah, I think the main headline to be paying attention to is the easing of the runoff. That is just a baby step towards quantitative easing, and then on the on the opposite side, you've got the Treasury buybacks. I think we are slowly stepping in towards more quantitative easing, and I think right now, after the latest crash in the markets seem to have priced in virtually no rate cut or no rate cut until November. And I don't think it has a lot of this quantitative easing priced in. So I wouldn't be surprised to see some sort of a bounce here. Beyond that, nothing majorly surprising. I mean, he talks a lot and says nothing a lot of times, and just kind of repeats points from previous discussions. But yeah, I mean, I think the markets probably overreacted to the downside, at least crypto markets. And I wouldn't be surprised to see a bottom form here. At least my base case, again, I could be wrong. My base case for a variety of reasons is to see a local bottom start to form if it hasn't already formed.
I'm just, again, taking a look at the Dow Jones here. I mean, we have a massive gap on the 1 hour. I mean, you're talking about a 2% gap. And these gaps do tend to fill, which would bring our target price up to around 38,466. We're currently at, need new glasses, 38.2. And so if you're looking for a scalp and you play around the traditional markets, expect this gap to fill when, who knows. But as Forrest mentioned, the markets do tend to overreact, especially Wall Street. These guys are literally on their computers. They have bots, they have algorithms that are putting in trades and buys and sells and options as this news comes out in real time. As he's speaking right now, you can see it on your screen. So just be interesting to see how the markets react once this is all said and done. I'm going to pull up the crypto bubbles. Take a look here at what are some of the alts doing, and we'll go to the 1 hour here. Green across the board on the 1 hour. I mean, you have Wormhole up 7% on the 1 hour. Bonk, the biggest gainer here, 10.4% over the 1 hour. Hedera, H.1 or H.1, 8.1. Render, I mean, all of it. Zoom out to the day, starting to turn green. And so just taking a peek at the markets here, I will refresh the page. Bitcoin 58.5. It did get under 57,000, around that $56,500 level. We are rallying up 2.3% on the 1 hour for BTC. Ethereum's approaching that 3K level again. And just green across the board. The top gainer in the top 100 on the 1 hour is Bonk, again up 10%. And so just interesting to see how the markets react. And typically, crypto and Bitcoin, when we talk about how Wall Street reacts, little more lagging. And we take a look at an updated CME. Did mention we got all the way up to almost 10%. We are back down to 6.3%. So this is updating live as Jerome Powell is speaking and asking questions. As Forrest said, it's just more of the same. Inflation is not where it needs to be, and we are prepared to go higher for longer until, right, this comes home to roost. And we're already kind of seeing it. So CVS stock crashed 13% after posting massive earnings miss. You also had Starbucks down 13% after a horrible quarter. Now, why is this important? These are stocks that economists gauge the consumer sentiment and consumer spending. So less people are buying Starbucks, less people are buying, I believe McDonald's missed earnings as well. Less people are buying fast food. So if people are cutting out $5, $6 coffees or a $5, $6, $7, $8 Big Mac meal, what does that tell you about the consumer confidence? People are struggling. We know credit card delinquency rates at almost at an all-time high. Government debt's at an all-time high. So people are struggling to pay for their bills, pay for their mortgage, their rent, their utilities. And so sooner than later, I'm going to agree with Forrest here, they're going to have to step in and do something. They're going to have to step in and either, start buying up, quantitative easing again, print more money. We're already seeing the debt cancellation. And so people are going to need a relief. And what better timing to get that relief than leading up to a presidential election? So very interesting. Forrest, can we check back into a Bitcoin chart and see kind of how that thing is doing?
Yeah, certainly. And remember that, let me share my screen here before I start talking to it. We'll go into the hourly. Remember, the thing that we are looking for here is a range recovery. That range, the low of that range is 59K, and really it's a zone, right? We want to see this zone. I'll get my highlighter tool out here. We want to see this entire like 59 to 60K. I mean, obviously 59K over here, it was pretty much 60K. We had a nice little trip down to like 59.2 over here, right? We want to see Bitcoin's price action. Zoom in here, and we're at 58.5 right now. We want to see this turn into a deviation. It is very bullish when that happens. Like another example is like on the opposite end, we had this deviation. That was very bearish, right? When you start trying to move outside of a range and then it turns into a deviation and you re-enter the range immediately, that is a failure of price action to move to the next level down. The next level down, we had some support here at 56. That's the level we hit. But the next level down that people were targeting for a lot of volume and to buy, myself included, 49K. Well, if we move back into this range above 59K, that is a failure to move down towards the 49K level, 4950K level, right? That's very bullish, right? It doesn't mean we couldn't get a rejection and move back down lower. But if we do see a recovery and we start trading over 60K, right here, and then we go on to kind of take out this downtrend level, that is super, super bullish. It means you're probably at the very minimum going to move up to the top of the range again to retest the top of the range. But after you've taken a trip down to the bottom of the range and you've tested this multiple times and you spent 60 plus days in a range, you're more and more likely to break out of the range. This is my base case. My base case for to be clear, over the last couple of days was that we'd actually hold this bull flag, right? This kind of downtrend line here, right? And we didn't. We broke below it, which is fine. As long as we broke below it and then we recover it, it's back in play. So this is my base case. Obviously, if we get rejected here, then we need to talk about, potentially cutting more. I already cut some positions and then re-added back here once we found some support. But it's just trading at level to level. I think Bitcoin looks solid here if it can get back into this range.
Hey, Forrest, real quick before you go out of the chart, that red downtrend line, that break point you talk about, hey, if we break above this, what price level is that? And what price level is the top of the range? Is that the all-time high?
Yeah, that's pretty much the all-time high with a couple deviations above it. 71.5. We start trading. Look, if we start trading in the 70s again, I'd say that's bullish. If we break this red downtrend line, it would be around 62 to 63K. It'd basically be taking this out. You'd probably see some form of bump and run, inverse head and shoulders form, right? So that would again be more confirmation. And then again, the shorter term time frame here, we're pumping right now, kind of retracing this entire crash that we had this morning. We want to take this out, right? We want to get back up. We want to pump all the way up here and see this inverse head and shoulders play out. We don't want to get stuffed here at 59K. If we just get rejected here at 59K and we can't get back into this range, that's not a good look. Now, I don't know that we'll get through on our first try. It'd be great if we do. But even if we just start consolidating underneath 59K and start pushing up against it, that starts to look more and more bullish. And then once we reclaim it, that is when that is confirmation for me that, hey, that is very bullish. To get rejected from moving down to 49K, reclaim the 59K plus range, that is bullish, and that's where I want to be looking for additional long positions. And on top of that, the other thing that I will say, and I think it can't go unsaid or unnoticed, is the strength out of altcoins today. Yes, altcoins have been rinsed, but when we saw what we saw out of Bitcoin dominance here, right, it is just very out of character for a crash in Bitcoin, right? You would expect altcoins to go down even worse. We saw Bitcoin dominance crash 2.3% as Bitcoin was crashing. That means most of the sell-off happened in Bitcoin and people were holding their altcoins strong in comparison to Bitcoin. That to me is fairly bullish. Doesn't mean we couldn't go back down, but there's a lot of little things happening that lead me to believe that a bullish reclaim is very much in play here.
That's very interesting. Like you mentioned, typically we do see sell-offs from the altcoins as well, but they're also rebounding a lot quicker and a lot, I guess, like bigger than Bitcoin is. I do want to, and by the way, guys, Jerome Powell, it's more of the same. Are you going to be cutting rates? What is the Fed going to be doing? He's going to say the same thing over and over and over again. 2% is our target rate. We're ready to hold rates steady. We got to wait for the new numbers, the jobs numbers, the CPI numbers, this and that. Now, if unemployment rate starts to tick up, you better believe that we're going to see some quantitative easing. Now, before we go any further, I want to give a big thank you to today's channel sponsor, Legacy Network. If you are into self-improvement, bettering yourself, maybe managing your time a little better, and you want to do that in a really beautifully designed app and be able to make money doing it, Legacy Network is coming out with an app very, very soon. You want to join the Legacy Network Telegram. The link is in the description of this video. Go in there, interact with the community, and then you'll get all the updates and maybe be one of the first people to download the app when it goes live. So big thank you to Legacy Network. Let's talk a little bit about some news I shared in the beginning. Robinhood and Uniswap. So big news here. Robinhood makes important announcement for Uniswap users. This is from You Today. Couple things here. According to a recent announcement from popular online brokerage Robinhood, users of the Uniswap mobile app can now directly buy crypto assets using their Robinhood balance thanks to the integration of Robinhood Connect. Users of the Uniswap mobile app can now buy crypto with a debit card via bank transfer or directly from their Robinhood balance using Robinhood Connect. I like this because it takes away a big barrier to entry for people, which is onboarding fiat. Especially with banks that are starting to shut down people's accounts for having an inkling of ties to a cryptocurrency exchange, whether it's a withdrawal, a deposit, a wire transfer, whatever the case may be. And so, Forrest, what are your thoughts here? Is this more bullish for Uniswap or is this more bullish for Robinhood?
What specifically are they facilitating here?
So with the Robinhood Connect, right, Uniswap users, so if you have a balance on Robinhood, you can now use that balance on Uniswap to buy tokens. Also, because people who have a Robinhood account, they're KYC'd and they have a form of onboarding and offboarding money, you can onboard money from Robinhood and then use it directly interconnected with Uniswap without having to send it over to a MetaMask wallet, connect to Uniswap, yada, yada, yada.
Yeah, that makes sense. So I think this is, I don't know if it directly benefits, I guess it benefits Uniswap because Uniswap gets more volume. But what this really benefits, I think, are tokens that are not listed on Robinhood, but now have access to Robinhood's users. So like just your everyday Uniswap tokens, I'll just throw a random one out there because I know it's not on any centralized exchanges really, Trump token. Like now you could go buy that through Uniswap. That's really beneficial for, a lot of these meme coins that don't necessarily have centralized exchange listings.
Interesting. This is obviously, if you know me, I'm all about making things simple and easy. We talk about onboarding the next billion users. You're not going to onboard them by having to write a 10-page manual on how to set up a MetaMask wallet and connect to Uniswap and make sure you don't sign this one. Make sure. So it's all about interconnectivity and it's all about ease of use for the end user. And this takes it one step closer. Also, we have this piece of news. So Coinbase integrates Bitcoin Lightning Network for 100 million users. Bitcoin and crypto exchange Coinbase has integrated Bitcoin's Lightning Network, enabling faster and cheaper Bitcoin transactions for its users in the United States, with the exception, of course, of New York, because I guess they're in their own little world there. A lot of people, Forrest, have said they're surprised it took this long. What are your thoughts on this? And do you think we're going to see, is there going to be a time where everything from a peer-to-peer or exchange to peer side is going to be through Lightning Network?
I don't, you guys know my opinion on Lightning Network. Like, I think Bitcoin's great. Let Bitcoin be Bitcoin. As soon as you introduce the Lightning Network, it's very difficult to use the Lightning Network in a decentralized manner, put it that way. Like if I want to use the Lightning Network in a decentralized manner, I've got to open up channels, right, which costs a Bitcoin transaction fee, and then I've got to fund that channel with my Bitcoin, right? So what you have is you have these institutions and centralized entities that open up all those channels with various partners, and then they kind of custody your Bitcoin for you, and then then it's cheaper to send your Bitcoin, but you're essentially on centralized rails when you're using the Lightning Network through Strike, for example, right? Remember, Strike kept all of their customers' Bitcoin at what was it called? It was the fund or the bank Prime Trust, the custody partner that went out of business because they lost their private keys. Right, Strike, which is an L2 provider or a Lightning Network provider, they were custodying their funds through Prime Trust, which is centralized. So as soon as you use the Lightning Network through one of these centralized custodians like Coinbase, it's fine. That's fine. Just understand that you are now using Bitcoin on centralized rails, right? Technically, you can use the Lightning Network on decentralized rails if you're going to manage it yourself and you're going to open up all those channels and pay the transaction fees, and that's fine. If you're going to be doing tons of Bitcoin transactions, then maybe that makes sense. Probably makes sense for a lot of miners to be doing that because they're sending Bitcoin back and forth. But yeah, I think it's good. It's not a bad thing for Bitcoin by any means. But I always, whenever somebody brings up Lightning Network, I just always want to like make certain, like, look, if you're using Strike, they're custodying your Bitcoin with a centralized entity. You're not, you don't own your own Bitcoin in that case. And the same can be said for a lot of these integrations of the Lightning Network. But yeah, it's good. It's good that Coinbase is integrating this. I don't think it's going to move markets, but it's nice.
I agree with you, Forrest, and which kind of like makes me wonder, why are the Bitcoin maxis so bullish on Lightning Network? It's a centralized solution to Bitcoin. It's weird.
Yeah, just let Bitcoin be Bitcoin.
Yeah, I agree. I'm looking at Bitcoin, bro. 59.3.
Yeah, this is phenomenal. This is exactly what we want to see. We're making a really solid attempt at recovering this range. What we want to see is today's daily close above at least 59K. At least that's what I want to see. I want to see come 7-8 o'clock. I want to see Bitcoin trading above 59K. I think that would be very, very bullish. Above 60K would be amazing. But I want to start like when Jerome Powell turns off the screen, turns off the cameras. I want to see Bitcoin continue to trade above 59K. If it can hold above 59K for any significant amount of time for 24 hours plus, then I think we're in really good shape. What I don't want to see is just bounce off 59K and move back down to like 57, and then that's all of a sudden pretty nasty. But yeah, looking real solid so far.
I agree.
Off of a nice double bottom too. Like if you look at the 15-minute and you've got it pulled up, look at that nice double bottom there on the lower time frames.
Yeah. Almost a triple bottom. Oh, you're talking about right here? Say if you go out a little more.
Just that one on the left, and yeah, exactly. Kind of.
That's it. We're going to the moon.
Yeah.
I agree. And I think price action, how Bitcoin reacts, and if there's any follow through on this move to the 59, potentially 60K, going to tell us a lot about the sentiment of the market. If we dip back below 57, then, hey, it was people speculating and everything's starting to kind of come back into equilibrium, and we are under 59K. So that'll do it for the show today. A big thank you to Forrest for joining us. Also, big thank you to Gravy Train. Saw some chatter in the chat here. Do you not like
chatter in the chat?
Yeah. Do you not like Gravy Train? Or
I mean,
just to clarify, you brought that upon yourself.
I did not bring that upon myself. Everyone was telling me that I like gravy, but I don't.
You don't like gravy?
I don't.
So no more Gravy Train, or can we still call you Gravy Train?
I don't really care, honestly.
Do you prefer GT?
No.
Okay.
No, I don't.
What about Train? We'll just call you Ashley. How about that?
That works.
Perfect.
That's great. Perfect. Really
big shout out
appreciate
to big shout out to our production team, Robin and Rocco, and Robin is back. So if you missed him, all right, guys, a lot of stuff happening today. There's going to be, we'll see what happens tomorrow. What headlines? We know this is a big week for earnings. We'll see how those numbers come out for some of the big companies. But I think we're all kind of betting here that at some point this year, we're going to see some easing and a potentially 1 or 2 Fed rate cuts going into the election. It's going to be pretty hectic. You're going to see some wild price swings. But again, if you zoom out and your time horizon is longer than 3 months, you will be in a good position. Put yourself and your family in a good position. So, anyone have anything to say or add before we skedaddle out of here?
No, we good.
We're good? Forrest, good? Ashley? Rocco?
Good.
Good. All right.
Hey, people asking to see the video, the old desk being destroyed.
We found a good home for the old desk.
No, I thought you saw it.
But don't worry, it will not be on camera, okay? So you won't see it ever again. But someone is going to make good use of that. Now, whether they're going to chop it down like a tree, who knows? Rocco! Guys, thank you so much for tuning in. Make sure to come back tomorrow. We'll have Forrest back here. We also have Tim Warren from Investing Bros. Talk a little about charts and price action. Do not miss it. We'll see you tomorrow.
Sin City Crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in. For big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Name the coin that's your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy a dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming hola, till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting FOMO control ya. It's over when the finger tornado close ya.